Hi, my name is Charla Reed, and I'm the founder and owner of 3 companies that all work in the residential energy space. Hathmore Technologies provides software and mobile app solutions for energy professionals, code jurisdictions, and energy programs. The Accurate Rater Network is a ResNet accredited quality assurance provider and a USGBC accredited Lead for Homes provider. And the Energy Smart Institute is a ResNet accredited training provider, ICC preferred education provider, and the platform for a wide range of online, on-demand, and in-person building science training courses. I perform training and quality oversight on a number of energy efficiency, health, safety, and building durability disciplines, and I've been working in these fields since 1979, over 40 years now. Today, I'm joined by Steve Baden and Ken Reed. Steve Baden is the Executive Director of ResNet, the Residential Energy Services Network. He's worked in the residential energy efficiency field for over 30 years, including 25 years with home energy ratings and energy mortgages on both state and national levels, and 10 years administering a state energy office. Mr. Baden initiated the Warm Homes for Alaskans initiative, which received the 1993 National Award for the most outstanding state housing program from the National Council of State Housing Agencies. Steve was also awarded a Lifetime Achievement Award from the U.S. Department of Energy and from ResNet. Ken Reed is a certified energy manager and chartered legend in energy with the Association of Energy Engineers. Ken's been a licensed realtor and has worked with many residential and commercial programs for energy utilities and municipalities. Ken worked as an instructor at Red Rock's solar program, teaching about energy ratings and mortgages from 1979 to 1981. He helped write the founding documents for ResNet, including financial mechanisms for implementing energy mortgages. Ken runs the Energy Mortgage Network that offers information on energy and green mortgages and loans. Ken was recommended by Steve to write the first set of labor standards for the home energy auditors and raters for the U.S. Department of Labor and ONET, the National Occupational Information Network. Ken is semi-retired now and writes the Save Energy blog. So welcome to both of you, and thank you for joining me today. Today we're discussing energy mortgages, what they are, their history, how they work, their limitations, and the benefits they provide to homebuyers, homeowners, residential energy professionals, lenders, and the entire U.S. economy. We'll include links to obtaining more information at the end of this interview. We're also discussing the role of the energy professional and contractors in the energy mortgage process. Certified home energy raters, or HERS raters, perform several vital roles in the residential marketplace. They work with builders and contractors to help provide energy efficient and healthy housing stock. They work with code officials, testing and verifying that newly constructed homes meet energy codes, and they help facilitate the financial process of obtaining energy mortgages. Okay, so let's talk energy mortgages. Steve, can you explain what an energy mortgage is and how it differs from other conventional mortgages?
Well, the basic concept is that you look at the various aspects of the cost of living in a home. And the concept is that if clearly energy is a cost of housing, Fannie Mae has projected that the cost of energy is the highest cost of owning a home outside of the mortgage loan. And the concept is the money you can save on your monthly utility bills, you can project into a mortgage and then be able to better afford a more efficient home or making an existing home more efficient. And the equilibrium of that is that savings has to be calculated more than the added expense. And energy mortgage has been around, since I think the administration of Jimmy Carter in one form or the other. But the basic concept is that you take that flow of money that's going outside your roof and put it into improving a home and financing it through a mortgage.
So basically, you're paying for your energy improvements by making energy improvements. Ken, what are the current limitations of the energy mortgage products?
One of the biggest ones is that there hasn't, until recently, been enough money that you could put into an energy mortgage. There was caps. They ranged from maybe $5,000 in the early days to maybe $15,000. You normally had a cap of either X amount of the value of the home or a capped dollar amount that you could borrow or add to your mortgage. And the advantage was that you didn't have to go in and get a second appraisal. You could get an appraisal, add these approved measures that need to be calculated by a certified energy professional, which is what we're talking about, a home energy HERS rater, so that they know that the calculations are performed by somebody who really does understand the energy savings available from a more efficient heating cooling system or a better package of insulation in the house, and then help figure out a way to pay for it. But the limitation is that it takes quite a bit of money to do a real, what we call in the industry, a deep energy retrofit. It's like a trade-off. The more money you spend in some packages will save money in others. If you really insulate a home well, you can downsize the heating and cooling system. If you put in super good windows, maybe you can back off a little bit on the insulation, or the other way around. In other words, you can do trade-offs to figure out what saves the most. But if there's not enough money to pay for things that are relatively expensive, like a new heating cooling system or replacement windows and things like that, then it limits what you can model against, and it makes it hard to come up with a package. And so that was a big limitation. But lately, the Freddie Mac's program, for example, you could borrow more than the original what you pay for the home to fix it up if you can justify it in terms of energy savings and also the value of the homes around it. So if you have like a home that's needs quite a bit of work and the homes around you are worth $200,000 and you happen to get this home for 110, they in essence will let you get that money up to 200,000. Of course, there's other factors and stuff. And one of the reasons energy mortgages haven't really taken off, another limitation, is people perceive them as being relatively complicated. We're going to try to break it down in this conversation to say they're not that complicated if you get the right people involved in the process.
You brought up Freddie Mac, so I understand that the energy mortgages are actually financed or purchased by the secondary mortgage market, including Fannie Mae, Freddie Mac, VA, and FHA. Is that correct?
Yes, that's correct, except that you don't really mortgage your home to Freddie Mac or Fannie Mae. You mortgage your home through a local lending institution or through a bank or credit union, savings and loan or something like that. And then those, when they get enough loans together, primary lender, they package them together and they sell them together as a group to the secondary market, which is now your Freddie and Fannie. So Steve, you have anything you want to add to that?
Well, I might add that the limitations of the previous ones were even more structural difficult than what you said, Ken. For instance, initially in the 70s and 80s, the idea is that you would increase your debt to income ratio. And the fact is that you usually have a certain percentile that you can put into your salary into a mortgage loan. And so they came up with this 2% stretch, which really didn't mean anything because a banker can increase your debt to income ratio stretch just because of clothes you're wearing that day. And so that really wasn't much. And then what they came up with is treating, in the 90s, is treating energy savings as if it were income. That was a little bit more finite, but the difficulty of that was that you can't use your entire income for a mortgage loan. You could only use around 32%, which meant you're automatically discounted the monthly energy savings by 68%. And there were other couple of structural problems to that. And the big problem was they always are trying to find, and the current problem is find their way around the idea of how do you credit those savings. I think it's basically based upon the structure of way that mortgage loans are calculated now. It's the traditional PITI, the principal, interest, taxes, and insurance, that are used there. Variable costs such as energy are usually not reflected in it. And that creates a difficulty because unless you treat energy as the cost of housing, you're always working around the fringes, and that creates the limitations. And so one of the things that ResNet is pushing is let's relook at the PITI. I mean, it wasn't exactly that Moses came down from the mountain with the PITI on stone and said, this is the way that mortgages will be for now and forever. And the idea is if you can take energy cost, again, which Fannie Mae has found is the highest cost of housing outside the mortgage loan, and put that into the equation, then you have real power. And so the concept that ResNet is pushing is take your traditional principal, insurance, taxes, and interest, and then subtract it by the monthly energy savings. Then that would, for dollar, the lower you risk your cost, the more dollar you have in housing. Now, initially the idea was you would do and concepts that was really popular in the 90s is looking at taking PITI and then adding energy cost. The difficulty on that is that lower income people are going to be burdened, and it's a punishment because if the higher your energy cost, the more of a drag it is on you getting a mortgage. And the whole purpose of having a federal secondary mortgage is to make housing more affordable to people. And by adding that burden on it, you're actually undo the purpose of the secondary mortgage. So the idea is instead is giving credit for the energy savings is a much powerful tool. And until we do that, we're always working around the margins. And there's two pieces. There's what you're saying, as Ken has said, is you had limitations. And it varies by the secondary mortgage market. I think VA has the least amount. And I think Freddie is one of the higher amounts. But more importantly, how you calculate and how you qualify for it. And the debt to income ratio stretch was just found to be nonsensical and had no effect whatsoever. And that was the one actually that was introduced during the Jimmy Carter administration. And then the other difficulty that you had is the calculations that FHA came up with on how you add to the appraised mortgage process was a structure that assumed that energy costs would never go up. So these numbers were put in the fact that 1992 hasn't changed at all. Whereas we all know that energy costs are significantly higher now than in 1992. And then again, the problem though wasn't that the secondary mortgage market's trying to scratch their heads and say, how can we make this more difficult to use? Is that they could never figure out how to work their way around crediting the savings of energy because they were blocked by the PITI. And until we actually address that issue, then I think we're going to always be around the margins. There's two kinds of energy mortgages, if you will. And the one is, for sakes of understanding it, there's the one that's called the energy efficient mortgage, which is a broader term that's used to all, but the energy efficient mortgage is aimed at looking at the increased energy savings of buying an efficient home already. The second one, and the one that probably works the best currently, is called the energy improvement mortgage. And that is when you refinance your house or when you purchase an existing home, you can use this mechanism to improve the energy performance of the home, roll it into the mortgage loan. Of the two options currently, that one seems to have the most traction and applicability. But the other difficulty is that by and large, the mortgage industry has gone to automated underwriting. Unfortunately, in all the mortgage products that I'm aware of now, requires the lender to manually put in the paperwork, which is another burden that mortgage lenders don't like, because the more time you take to be able to do it, the more cost it is on their end. And frankly, mortgages are a commodities market, which is based upon a big numbers. And the fact is turnarounds have to be fast. And anyone who has had to sit through buying a home knows the pain is on a closing that you have to go through ream after ream after ream of paper. And the loan officer going, speak, and you're trying to read this, and then after a while you just give up and start signing. And I think that's a lot of, kind of puts into that. And the more paper you put into that pile, the more resistant there is. And that comes the other weakness of the energy mortgages. And that is, it has to be offered by the lender, because all programs are not mandatory, they're voluntary. And one of the problems that consumers have had since the 1990s is actually finding a lender who would actually process it. I've been working in and out of the mortgage industry for over 30 years. And one of the things I learned in my experience is that no one ever gets in trouble in the mortgage industry for saying it doesn't exist. And it's so often easier to say, no, I never heard of that. No, we don't want to do that. This is much easier for you to go this way. And so even areas and periods of time where there was a lot of marketing for these energy improvement mortgages. For instance, at one point, Fannie Mae had a whole division of people promoting the energy products. But as long as lenders don't know about it or not willing to do it. And the other difficulty is that even if you do a training program and get loan officers trained, what you find in the mortgage industry, it's very dynamic. People shift jobs quite often. That branch bank may have been really know how to do it, that person works somewhere else now, and the new person came in there and never heard of it. And so what happens many times is consumers just get tired of hearing that it doesn't exist, or I don't know what it means, I don't want to do it. And so those are all difficulties that's been going on. But again, just to say, for those who are willing to go through the process, particularly when they're refinancing a home or buying an existing home and want to make the improvements, this is still worth the effort. Because think about it, you know, the current interest rates now are probably the cheapest they've ever been in U.S. history. I just refinanced my home and got an interest rate of 2.5%. And if you're looking at refinancing your home, this is a great opportunity to make these improvements. If you can make a deep retrofit of your home and finance it at 2.5% over 30 years, your energy savings are just many times over, beating what the extra cost of it is. And you're more comfortable and have a more efficient home with a higher resale value. Because when you look at my lifetime as an adult, there's been like 3 different big waves of refinancing. Particularly when I bought my first house in the 1980s, I paid an interest rate of 15.5%. And I refinanced that house about 4 times. And I think I saw a number where 80% of the time Americans in the 80s and early 90s refinanced their homes at least once. Could you imagine what our American housing stock would look like if we had a program that worked when all those refinance things that took place? So again, you know, just kind of imagine if there was a workable energy improvement mortgage done in any one of those major refinance waves that took place in the United States, how much better our housing stock would look like right now. And again, what's nice about it, it doesn't take any outlay of federal funds. It's paid for by the loan, by the person who buying the home. It's financed through the energy savings. And had we had a mechanism, we'd be much better off as a country now. And we're going to be looking at another one once we get through this pandemic and economic downturn, because again, the Fed is just incredibly pushing money into the system at rates that are unheard of. I mean, I remember a couple of weeks ago, the Fed put out money at a negative interest rate. And so once the economy picks up and people start feeling more normal again, because of the lower interest rates, I think we're going to see a boom of refinancing. And so that's why programs such as this that you're doing is so important, because the more people that are aware of it can take advantage of it. But it's not simple. Unfortunately, it's not like running off a log. It takes a lot of work, takes a lot of perseverance. But shows like this and the resources you're going to show will give you the tools to do it.
And Ken, you've been talking recently about the job opportunities and the opportunities for green jobs, for residential improvement industry, for energy professionals, obviously. Can you talk a little bit about that, about how energy mortgages might help in that vein?
All right. Well, let me start by saying we are not used to having the big unknowns that are happening now. We're recording this at the time that the COVID-19 virus has changed pretty much everybody's lifestyle, especially at the moment. And Steve's talking about things getting better. And folks talk about, how do you predict the future? What can you do for the future? And there is one thing we can absolutely do today that we know will help us in the future. And it's by putting in either a very efficient package, an energy improvement package into a home to cut down on the amount of energy, or what they call a site energy production system, which would be a solar system or something along those lines that produces energy at your home, as long as it's done the right way. So we've got to throw caveats in there. If you don't own the solar system, then that, you know, if you lease it, then that's different from buying it and having it available to you long term. But I don't want to get into all the finances, except to say, if you know your energy prices will either be next to zero or you'll be producing your own energy, you in essence have financed your future. You know, by not paying for energy in the future, you've already solved a future problem. As far as jobs go, as we've gone along in time, we've learned that the value of a third-party inspection, whether it's a home inspection done by a home inspector just to see if the home has had termite problems or water damage, or the roof's too old, all the things that home inspectors look at, or if there's something structurally wrong with the home, all those things are important. But Steve's been saying energy is important too. And you and I have been saying energy is important for a long time as well. if you have a third party person come in and say this home could use a new furnace because this furnace is not efficient enough and it's degraded over time, it just will pay for itself basically. And they can even tell you how many years. It may not pay for itself in a year. It might take 5. The old answer to anything improvement-wise that took very long is people say, well, I'm not planning to live here that long. And almost always people say, I plan to move in 3 to 5 years. Well, no, most people don't. So I wish that argument would kind of go away too. If you put something of value into a home that saves energy long-term, even if you do decide to move, it could be a sales benefit to tell the next people, this home has a real good insulation package. This home has a relatively new furnace. This home has a heat pump. And then we could talk about other factors too, like the electrification. We got to start moving away from gas and to electricity because it can be produced by a number of things like solar. Whereas if we burn up all the natural gas that there is, which would still take us some time, but once it's gone, it's gone. So we're moving away from burnable, expendable fuels into more renewable long-term fuel sources, the sun and all. So if we push in these directions and we start having people come in to make sure that the home is set up correctly and tested, that produces jobs for our people, which is energy auditors and a home energy rater who has a little bit more authority as far as its signatory authority. They can sign off on energy tax credits, on Energy Star homes, on green homes like LEED certified homes by the U.S. Green Building Council. There's a number of things they can sign off on that an energy auditor does not have that ability. But
HERS rater is also certified and overseen by a strict quality assurance process.
Right. The quality assurance sets the rater and the whole industry apart from a lot of the stuff that happens. You have people coming in that are trained and certified to look at your home and save energy, and you have a follow-up of other people to make sure that you're getting good advice from the person who's coming to your home and talking to you, that they are giving you realistic information and not fly-by-night stuff. So.
And it also provides jobs for the people doing the work, making the home improvements, and the contractors.
Correct, yes.
And the trades. And you can't outsource any of that offshore because the houses are here. And the work
Correct.
Has to be done here in
That's
order
correct.
to improve these houses.
Right, and it's even much more.
I mean, you're not going to ship your house to Korea to have it upgraded.
No.
Right, and it's very
And,
cost effective to make installation here, for example, because it's very volume-wise, it takes a lot of space, but it's very lightweight. So it just makes sense to make insulation in the middle of the country than it does to have that shipped in. Have a whole boatload of stuff that weighs like a marshmallow.
What we're facing now, again, this is recorded during the midst of the pandemic, but we're talking over 30 million Americans that are on unemployment. These Americans had their lives just disrupted. We're seeing the cause and effects, and we've seen already that Congress has put in $3 trillion in trying to boost the economy. And when you think about it, the other thing that's interesting and stuff that I've been reading is the clean energy sector has been one among the hardest hit sectors outside of restaurants and hotels and airlines that's out there. And so if you're looking at some kind of avenue to put Americans into jobs, and realizing that we cannot continue to throw trillions of dollars into it and still have any kind of sanity in our financial system, we're going to have to find ways to create jobs that don't have to be almost $3 per every job for every dollar you're giving into the economy. And it seems to me this is a perfect example. If we had a rational energy improvement mortgage concept, that at the time of refinance, you can make these improvements as a stimulus program, say that you can put $15,000 to $20,000 into the home improvements. Again, the proviso being that the cost of the improvements have to be offset by the savings, and the fact that would mean millions of homes could be refinanced and retrofitted at the same time. Again, at no cost to the federal government, no mandates, no you have to do this. One good thing that's taken place since the 90s is the cost of that third-party inspection or the home energy rating is financeable. You're not able to do that with termites and other inspections, but for energy, the secondary mortgage market considers the third-party inspection as part of the energy efficient package. It could be financed. And the other big thing about it is there's no additional down payment requirement. So that means if we could find a truly way to do it, you could go in, refinance your home, capture that mortgage interest reduction at the same time, improve your home, and then reduce your energy consumption 30, 40, 50%. And just think the number of jobs of contractors, auditors, installation installers and stuff that would go to work that wouldn't require trillions of dollars, because the mortgage process is one of the largest sums of money we have out there. And we could finance through this, then we're creating real jobs. We're getting people off of unemployment. Because one of the things when we come back and look at it, I think health, because of what's happened since February, has become critical to Americans. And the idea I think is going to become important is that they're seeing that their home needs to be a healthy home that they can feel more comfortable with. And a foundation of a healthy home is an energy efficient home. Mm-hmm. And it seems to me that this is going to be a premium. You were talking about people not staying in their homes maybe the whole time, or saying, I'm going to be leaving my house. But the point is that if you have a home that's more efficient, that's more comfortable, and that is more healthy, that you can have a higher resale value. So not only do you capture the savings immediately with no extra money being down or extra income to qualify for, but when you sell that home, you're going to have a higher price. And I think we're looking at the opportunity now, particularly with this emphasis currently in the country to try to get people back to work, that this is a great way of going it. And again, these are American jobs, and they're putting in, by and large, American products.
Well,
I couldn't agree more.
I would like to point out, because we're talking about why the jobs, there's also a growing number of folks, and we'll just touch on this, but their homes are burnt down, or they want their home to be resilient. They want their home to not burn down next time. They want their house to not blow away next hurricane. They want their the next earthquake that happens, that their home doesn't rattle and fall down. We see examples of shoddy construction and the building just being flat, or multiple stories landing down into one. Houses burning to a crisp, and the house next door not. Houses blowing away in a hurricane, except for maybe the fortified home or the resilient home that has some concrete in it and some steel or whatever, some reinforcement is still there. We can certainly build them to withstand higher winds. We can certainly build them to withstand higher rains. We can certainly make them where they are relatively fire resistant. You still may catch fire, but you don't have to make a home that is actually real, like a tinder. We're just waiting for the first spark. So then we, as a group, can make sure that as the energy professionals go out, they learn to look for this stuff. A lot of them already look for it now. In other words, the value of the jobs will be not just somebody going out and saying, I can help you save energy, or I can make your home have a better indoor environment, but I can also make sure that your home doesn't disappear on the next major problem that comes along, or as best that, our technology will let us, as long as people are willing to look at that. So I think that's important as well. And that does provide jobs for people, because not everybody wandering around right now knows how to make a home more resilient, or withstand hurricane force winds, or be something that doesn't burn easy.
So you're saying if you're going after an energy mortgage and saving this money and improving your home energy-wise, you may as well go the next step and help improve other aspects of it as well.
Yeah, a lot of it is not that much more expensive. It's just the type of siding you choose when you redo your house, or the type of roofing you use on your house, or the reinforcement that you decide to have somebody come in and put on your roof structure, so your roof doesn't separate from your walls, lift off. It's important that your home will last. Durability and resilience and ability to withstand the elements is important to me, and I think that is going to be more and more to everybody else as well.
And health and good indoor air quality.
Exactly.
And I think the takeaway to this for your audience is a couplefold. One of which, if you're a rater and you are a contractor now, it's really worth your time to bone up on this energy improvement mortgage. And I know you're going to leave after this broadcast some resources. Get yourself aware of that. And this is a really good business strategy for you. Start reaching out to lenders that you know or you can see in your community, and figure out which ones are the most aggressive out there that's looking at either a green realtor or the buyer. People don't realize is that most real estate agents are working for the seller. They're representing the seller. But we're seeing increasingly a consumer base where they represent the buyer. And these buyer representatives are aggressively trying to find the benefits as much as they can for their client when they purchase a home. And it seems to me the buyer-aimed agent is a good way to look at it and educate them. Get boned up on the program, find a lender. And then when you start selling your services, either being as a rater for existing homes or as a contractor, saying another reason for going with my company is we can help you walk through this process. I don't know of a lender, if you could bring a customer in, that will say no. So if you already have one that will listen to you and they know that you can bring customers in, then you have a relationship, and then a lot of those barriers will take place. There's a real reason now to pay attention and focus on that. The other call of action is we're going to see calls to get America working again, to put the economy going on, investing in infrastructure. And it seems to me this is a magic moment for people to educate their representatives that they're going to be looking at these kind of events, putting Americans back to work. The energy efficient mortgage is the easiest, least expensive option that they can do. And if they ask, well, what can you do to make it more work? Then I think that's when you go, people have to think big. If we're going to achieve this, we're going to have to get out and look at the concept of just making the cost of energy recognized as a cost of housing. In order to do that and qualifying for a mortgage loan, to any way that becomes feasible, that goes to the concept of taking your traditional principal, interest, taxes, and insurance, and by modifying it by subtracting the monthly energy savings. The opportunities now, and so the really call of action is there's two things you can do. One, most immediate, and that you can take advantage now, is learn more about these energy improvement mortgages, and then figure out how you can use that and fit that within your marketing strategy. But then the second one, it's time to aim for the fence. This is the time to go and say where the decision makers are going to be looking at ways to get Americans back to work. This is a way that can be done at no cost. And frankly, be honest with you, it doesn't take an act of Congress to do. It's a stroke of the pen of the president could implement this through the guidelines of mortgage loans. If we want to avoid the last economic crash we had of 2006 to 2008, and that was the security of mortgage loans. If you can have homes that are affordable, that are more comfortable, people are less likely to jump if the economy goes bad, or if it is foreclosed, it doesn't take as much money to put it back in the marketplace. So for those various reasons, I think that the time is now to be able to look at this and start educating decision makers that this is a path that can be done fairly easily without a major legislation, without major outlays of federal funds, and to get Americans back to work and Americans in more comfortable and affordable homes.
Although the country right now is outlaying a lot of funds, and I would think that that would be wise to have energy auditors and raters in our profession do third-party inspections to make sure that money's being spent wisely, because they're going to spend money now. So let's do the best we can to make sure it does the most good. And
think about it, we just in Congress put in $3 trillion.
Right.
If we did an energy improvement mortgage process that worked and it was affordable and efficient, we could actually pump that kind of money in for jobs on improving homes and lowering interest rates of Americans without that outlay of trillions of dollars in cash that the taxpayers have to come up with, that the mortgage process could work. And clearly the mortgage process has those kind of sums that they can raise through the normal means. So the time is now. I think that it takes two things. One, it's time again to look at it if you're a contractor or a rater and using the existing FHA, VA, Fannie and Freddie. And frankly, Freddie Mac is worth looking at because they've been aggressively trying to make these improvements easier. And then the second one is time to aim for the fence. Let's be aware. Let's start educating decision makers how this can help the economy and get Americans back to work and make our homes more comfortable.
So what's the difference between an energy improvement mortgage and loan programs such as PACE financing or the FHA 203K loan that has an energy component in it?
PACE financing is probably the most popular form right now in many parts of the country. I live in California, and it's probably the largest factor of improving the efficiency of existing homes or putting on solar collectors. What it does is it adds the cost of the improvements into the property tax, and you pay for it through higher property taxes. The problem is it doesn't have the same rigor that an energy improvement mortgage is. You don't have to have a third-party inspection. It doesn't have to prove itself to be cost-effective. And way too often we're seeing unscrupulous lenders taking advantage, particularly of senior citizens, putting them in projects in that they can't afford. That actually puts their house at risk because their property taxes went up so high that they can't afford it. It is still a very easy way to go about it. It's better, let's say, than 2 or 3K that the FHA does, which is a way that you add improvements to the mortgage loan. Matter of fact, the energy efficient mortgage component of FHA is also allowed to go through that program. But the big difference, I think, is that the interest rates, again, on a mortgage, when you think about it, is a lot cheaper than PACE financing. It's over a 30-year period of time, whereas the PACE program is a shorter period of time. It has consumer protection in there, and that a qualified third party, has to go and do the calculations to demonstrate the improvements being made are cost effective. And so I think by and large, for the long term, it's better. The problem is, frankly, PACE is easier to get. There's much more lenders about there that offer it, and it's easier to jump in. I think there are some problems with it, but I think over and large, if you're going to be refinancing your house or buying a house, if we could have an energy improvement mortgage that works, it'd be better. There is a new SAVE Act being proposed, but I have to be honest with you. Having official recognition by Congress is important. ResNet supports passing the SAVE Act. It is an important first step, but it is an incremental in its nature. In order to get it passed, a number of compromises had to be made, and it's almost a voluntary program that really doesn't go to the heart of the matters that I see it. And that goes back into making dollar for dollar energy as recognized as the cost of housing. As a first step, SAVE is important. It does give recognition out there. It does create a congressional mandate that the second mortgage market do this. But I think SAVE is an interim step where we still have to go in what I call is a rationalization and reform of the mortgage process.
All right. So
All
it
right.
sounds like the energy mortgage is an idea whose time is now and needs a little retrofitting in order to actually be very effective. But for those who are willing to work for it, it can be extremely effective and it can be very helpful to our economy.
I started this whole career partially because of this, looking at the mortgage financing. And frankly, it's been one of the most frustrating things in my career because it seems so logical, it seems so sensical, but we're basically still dealing with products that have been around in one form or another since the 70s. That's never hit the penetration rate that we need to. I just think the time is now. It's not an easy thing. I mean, again, if you want something easy, fast, if you're a homeowner and you're not going to refinance your home, PACE is the way to go. But if you're going to refinance your house or you're buying a house, then it is the energy improvement mortgage. And I'm seeing out there that we're going to see a lot more refinances going on. And so I think that this is an opportunity for contractors and raters to be able to add to their incomes. But it takes work, and you've got to study about it and know what. And more importantly, you got to find a lender that will work with you.
Exactly.
I'd like to bring up one thing too that's a little outside the box thinking. Solar room additions that prove to save energy can be taken into account in the software, the modeling software. You could build a solar room addition onto your home that also is spaced to grow vegetables. You can't get credit for the vegetables you grow, but you can get credit for the energy produced by the room in the wintertime as part of an energy savings package. So it's, again, something else that you could look at that maybe will help you finish out your home and do a little bit more than you even thought about doing to make it more comfortable, to lower your energy bills, and to have maybe just a small but viable food source, food that you can trust, that you grow yourself. That is becoming more and more important to people. So, and of course, we got the new smart technology. Some of those will save energy and they can be put in the mix. I see a lot of opportunity here for not only job creation, but people to innovate and say, I have an idea of things that save energy, and this is something maybe we can help by working it into the energy savings into the mortgage. And so I see this as a huge growth opportunity in my mind.
And then, because as you point out, the technologies are amazingly changing daily, and they're getting more and more cost effective. And there's a myriad of ways to either produce energy or reduce energy and the added benefits you're talking about. So the strategies are there. It's that the fact is that we need the ability so that Americans can afford to do it. And to me, looking at realities of going on right now, the national debt and stuff, the only way we're going to be able to do this for the residential sector at the scale that's needed is going to have to be through the mortgage process. And what's nice about the energy efficient mortgage and using a rater is that you don't pick technologies. The energy efficient mortgage and improvement mortgage are technology neutral. One product competes with the other product. And the beauty of it is the consumer makes the decision. They decide what they want to put in their home. And so because of that, it is really technology neutral. It's not the government picking winners. It lets the marketplace compete where it wants to. The main thing is, again, it's not that we don't have the technologies or methods to save energy. We just lack the financing that Americans can access to be able to finance it.
And we need the third-party inspections to make sure that you, in fact, get a working system.
If you don't measure and you don't know, and at the end you don't confirm, then you're opening yourself for fraud and all kinds of stuff. Since this is with a mortgage loan, it does require a third party. And again, that is why even today, the mortgage industry will finance that third party inspection.
Okay, well, thank you both very much for joining me today and for having
Thanks for the invitation.
discussion about energy mortgages. I've learned a lot myself, and I'm sure that our viewers will too.
It's a timely subject.
It is.
And it's something younger people can do because, well, helping people make their houses better it's something they can do.
And we could all talk about it all day long.
Yeah.
That's right.
The need's there. We just got to figure out a way to satisfy it.
Yeah.
Well, I appreciate your invitation for me to help with this today and bring up the subject matter, because the more people are aware of this, the more chance we can get something done.
I agree. Agreed.
This video will be posted on the energymortgagenetwork.com website and with additional links and details. And it'll also be available through ResNet and the Energy Smart Institute.